Hey there, everybody. My name's Allison, the Director of Risk Tolerance here at Simpler Trading, and I have an idea for you on MU to potentially play into the end of month expiration for May. So as you can see, MU has just been on this bullish tear to the upside. It looks beautiful higher. We finally are starting to get some bullish exhaustion, which means that the price either has a good probability of consolidating or getting a directional pullback. As you can see, we've had a little bit of a directional pullback, but so far daily supports are holding. However, what I'm looking at is to continue to potentially play this down. And the reason why is because when I pull up this indicator over here, this is called the Quant Pivot Indicator at Simpler Trading, we are well above our monthly H2 level. And as we know, the end of the month is happening next week. So what I love about these quant pivot levels is that they're all a probabilities game of where the price could end up closing at or below in this case when looking at it. So the H2 level is at 651.80. That's where that level is. It's this number over here. And MU, from a monthly perspective, has only closed above this level 10.4% of the time, which means that there's a good probability, right, an 89.6% chance that we could see MU continue to sell off to get back down to or below 651.80. So to take advantage of this high probability play, I was looking at a vertical spread for next week's expiration, encompassing those strikes. So the 655, 650 is about a 144 cost basis, 356, 355 max profit potential, depending on how you feel. Here it is jumping around a bit, with the idea that the underlying price will get back to or below 651.80. So that would be pretty close to our short strike. If you want to make sure, however, that the price is going to be below your short strike, right? Then you might go a strike set higher. The 657.50, 652.50 is $1.25. I like that. You could also incorporate a smaller width spread for those of you in smaller accounts. I kind of like this one actually, 655, 652.50. It's only about a 52-cent cost basis, a 298 max profit potential. So it's almost a 1-to-4 risk versus reward. You're risking 1 for the possibility of 4 times that amount for your max profit. With the idea, once again, that MU could continue to sell back down to or below 651.80. From my other technicals, from a daily perspective, 651.80 is still well above the ATR trailing stop, which is my next big support. That's at 602. So that's the reason I like this trade. I wouldn't just blindly jump into a counter trend move, but in this case, we have the benefit of exhaustion. We also have room into the next support level. So if the 10 continues to act as resistance from here, I think there's a good chance that price could come back down a little bit more. The lows today even were right by that H2 quant pivot level. 652.21 was the low today, right? 651.80 is the level we're trying to get back to. So it wouldn't necessarily take much for MU to get back down into that range or below it, still keeping its natural bullish trend on the daily chart, but following through with roughly the 90% of the time that it closes below this level. So that's what I'm looking at, guys. Thanks so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.